There is a big difference when it comes to buying your own home versus buying an investment property. So, when you're buying your own home, it really comes down to what you like. For example, which neighborhood you prefer to live in, what type of home your family needs, and what style of home you like. And so, a lot of new investors come to us thinking that this should be the same criteria when they're looking for investment properties, but it's not. In this video, I have Nick, our broker of record and partner, who's the most experienced realtor on our team in terms of end user homes, join me, and we're going to break down all the differences between an end user home and an investment property, which should help you navigate the real estate space better. Remember, if you like this video, please give us a thumbs up and don't forget to subscribe to our channel so you see more videos like this made specifically for real estate investors in Toronto. We broke this comparison down into 6 key differences. Now, there's a lot to cover, so we'll jump right into the first difference, which is the purchase price. So, Nick, tell us, what is the difference in purchase price between an end user home and an investment property?
The bigger difference is in the freehold space, where there is a big distinction in location and finishes between where people want to live and where the best investment might be. You can get a starter investment freehold like a semi or a bungalow that gives you a positive cash flow and good appreciation in Toronto for under $1 million. Homes in more family-friendly end user neighborhoods tend to be over $1 million, and they would need work. Then if you really want something that's ready and an end user, you're looking closer to the 1.5 million as a starting price. Now, condos are usually closer in price because they attract a similar renter and end user, the young professional demographic without kids. These guys like to be closer to the action, and both condo rents and end user typically want the similar, fancier finishes.
All right, let's move on to the next point, which is location. So I know you touched on that being a big factor that affects freehold price, but can you elaborate more on what the location differences are?
Sure. An investment property, people tend to look for where there's more rental demographics, where people will rent. For end user, people tend to look for the neighborhood feel, the family feel, where you're close to schools and you're close to family, you're close to your friends. You're in that community that you're comfortable with. Most of our end users say, well, my friend lives in this neighborhood. Can we find something like that? The end users also don't look at developing neighborhoods. They want to be in an already developed neighborhood. Investors tend to want to buy places in areas that are developing, that are a little bit on the rougher side, and eventually will become gentrified and better places, which will increase or appreciate the value of their property. So they have the time to wait, where end user families don't want to do that. They just want to be in a mature area and all that.
Yeah, you're right. And then there's also one last thing, and that's the rent yields. So if you were to choose to create a rental property in an end user neighborhood, the rents that you get aren't actually that much more than the rents that you can get in a developing neighborhood, in a rental neighborhood. But your purchase price is a lot higher in the end user neighborhood. So effectively, your rent yields aren't as good in an end user neighborhood. And that's why the end user neighborhoods also don't make very good rental properties. We talked about location, but even within each of those neighborhoods, there's different types of freehold properties like semis, bungalows, or detached homes. So can you tell me the differences in the type and size of freeholds that end users might choose compared to what investors might choose?
Well, detached properties are popular with end users because it gives families more privacy, but you trade that for a premium and purchase price. Right now, especially with COVID, we are also seeing an uptick in multi-generational living, with grandparents moving in with the kids and grandkids. And so they need a secondary suite inside the house.
We're definitely seeing a lot more people looking for houses where they're like, okay, my parents, I want a separate space for my parents to live in there, but I don't want them in the same home. So it has to be a separate unit inside the house.
So end users do prefer the detached better, but investors will also look into semi-detached because they're more affordable and the rent differences between the two are almost next to none. The only drawback to that is if you want to knock it down and build a new house, you can't do that with a semi. You need a detached property.
On the rental front, we also find that, once you pass that starting price point of say $1 million, The higher price that you go, you often see better investment returns. At a higher price point, there's less competition in the market, which means that you can get a better deal, hence better appreciation. And then you also get better rents with more units. And then the expenses are shared amongst more units, which also translates to better net yields. So going back to what you said earlier about house finishes, you also talked about how end users prefer fancier finishes. So if I were to renovate a house to bring in value add appreciation, is there a difference in return on investment between an end user home and a rental property?
Well, for the end users, they're going to be living in the house. So when it comes to renovations, they're going to be more fussier, more pickier on the finishes. They're going to want the fancier stuff, the nicer stuff, which relates to more expensive renovations. And it is worth it because they get to enjoy it while they live in it.
Yeah, renovating an end user home might be more expensive, but you might be able to get a higher value add appreciation. But renovating rental properties still makes sense and it can give you good value add appreciation as well. The other bonus is that you don't need to put in as much money. For example, a simple paint job or basic kitchens and new appliances can do wonders and maximize your rental income this way. So obviously, there's no rental income for end user homes. So let's compare the appreciation side. I actually looked into it, and the average appreciation seems to be relatively the same when it comes to end user homes and rental properties. But I don't think we can say the same about the price fluctuations. So, Nick, what are your thoughts on that?
I find that because there's more emotional buying when it comes to the end user neighborhoods, there's bigger price swings in the market. In hot markets, they go up more, and in downturns, they have to adjust downwards because of the same reason. Investor neighborhoods are more stable. And if you choose a location that is still gentrifying, there's a bigger uptick in appreciation.
And now there's differences for the property itself, but there's also differences in terms of financing as well. So for an end user home, if you buy a property for under $1 million, you can qualify for CMHC mortgages and put down less than 20%. But for an investment property, the minimum down payment is 20% no matter what you're buying. So this means if you want to get into your first property and you have more limited capital, the lowest barrier to entry would be to get in as an end user.
Correct. A mortgage for an end user home is limited to your personal income, where an investment property, they take into account the rents, so you qualify for a bigger mortgage.
Yep, that's right. And then let's talk about cash flows. On an end user home, there's no rental income, so there's higher carrying costs out of pocket. So, what this means is that when interest rates drop, like what we experienced last year, this can lower mortgage payments, which gives more room for property prices to go up. But now, since the prices have already adjusted higher and now interest rates are about to climb starting next year, then the rising interest rate situation will actually hit end users harder. And so property prices in end user neighborhoods are expected to rise slower than investment properties. But for rentals, instead of looking at operating costs in your mortgage, the rents also help you pay for a lot of those expenses. So you should actually look at your net cash flows instead. So when rates go up, as long as rents also go up, we expect more stable appreciation for rental properties in Toronto moving forward. And I actually made a video that talks all about this. So make sure you check this video out and I'll link it somewhere up there.
As you can see, the criteria for end user homes and investment properties are not the same. But that also doesn't mean you can't make good decisions when buying end user homes.
Yeah, that's right. So we can take an analytical approach when searching for investment properties, but we can also take a similar approach even for end user homes. In fact, we have a tool in place that can help you quantify qualitative aspects for end user homes. And when you do that, it can help you make better decisions. So if you're looking to buy an investment property, we can help. But if you're looking to buy an end user home, don't be shy to reach out as well. When you work with our team, we'll look at your requirements and your preferences and then match you up with the best property that fits your needs. And then after we help you buy it, our team also provides renovations guidance, leasing, and property management if you need that as well. So just connect with us by heading to the link in the description below to get started. So Nick, thank you so much for joining me for this video. And for everyone else, don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.